All right, we are back for another video today. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn, Focused Compounding. If this is the first time you're tuning in with us, hit that subscribe button, thumbs this video up. Gonna bring you a bunch of different investing videos on YouTube. Super pumped to do it. And make sure you follow my Twitter at Focused Compound, which is the best place to get all the content that we put out on the internet. So in today's video, I thought I would spend some time really just going over how to really keep track of everything as an investor. Obviously, we come across a ton of different information, and I really think setting up the right process is a key to being a successful investor and really just staying organized. I see a lot of investors have their different sources on how they go about things. A lot of what I'm going to show you today is really just how I do it. There is no right or wrong way to the process, but this is just stuff that I have taken either from Geoff or other investors, or really have just learned on my own about how I like to keep track of everything. And the first thing we'll go over is the watch list. And I think watch lists are so important to the investing process because you need to do the work that's required when markets are at all-time highs or when stocks are at all-time highs. And having a watch list will allow you to act decisive when, I guess you could say, you know, things like have happened this year where times are more volatile, stocks sell off, and you're able to act quicker instead of just starting your research then. So I'm a huge fan of watch lists because I think it allows people to not confuse a statistically cheap company with a margin of safety. I think if you build a watch list of companies that are great, that you would like to own at a future price, and then the market gives you a chance or an opportunity to buy it, then it's good to have all the research done, have it on your radar, and already be so much more ahead in the investing process. So I don't use a Bloomberg. And for individual investors out there that don't use a Bloomberg, I hope this video will help you. What I'm going to do is I believe I could actually upload this Excel file to maybe like a Google Drive and then include it in the show notes or the About section of the YouTube video. So it'll already be formatted, so you could feel free just to download that yourself and enter in your tickers that you want to follow. Of course, you could do so many different types of watch lists. I promise you, this is not anything that is very high tech or anything. If you're an investment banker, you're definitely going to laugh at this. But it's purposely not supposed to be high tech and complicated. I think if you need 50 Excel tabs to keep track of everything, you're probably doing stuff a little bit too, or you're making it a little bit too complicated. So what's cool about Excel is they have this this stocks type data type thing that I use a lot, and I'll just quickly show you how to do it. I copied and pasted it, but I already had it formatted just for company price, the daily change, percent change. This is delayed quotes, but if you're an investor, I don't think that matters. Market cap, we like to follow beta, as everyone knows, so we have that there too. PE, 52-week low, 52-week high, and then how far it's trading within its 52-week low, which is something that I like to track, and I'll show you why in a second. And then if you did due diligence on the company as well, you could add that in there. So let's say you wrote up Bank of America at $30 per share, and then you could track how far it is from $30 per share, or since you did your write-up, and then you could add your own interest price on when you would like to revisit it. Let's say you'd like to potentially buy Bank of America at $15 per share, or you could put 15, and then you can you could track how far away it is from $15 per share, right? So it's 36% away, 36% above. It would need to fall 36% to get to your interest price at $15 per share. And we could show you how I format it just to really have this almost be like a radar screen. And then, of course, you have your thoughts and stuff like that if you want to take additional notes. So again, there's no right or wrong way to do this. Do this the way, or make this process tailored to how you like to do things. I'm just going to show you what I like to do, and if you take something away from it, cool. If not, no worries. So let's say you want to follow Bank of America. You can enter in the ticker. What I'll do is I'll just show you. So let's say we want to follow Apple right there. You enter in your ticker. Again, the one that you're going to download will have all this formatted, so you could just copy and paste it down and type in your tickers. But it's not rocket science. You click stocks, and then it should format it for you. And then if you want to have its price, you literally just highlight it, and let's see, you highlight it, and then you literally go down to price and you click price if it wants to work. So you do that, period, and then price. And then you enter in. And then you could go across, you could add the change, the percentage change, the market cap. You could customize it to whatever you want. I already did this, so we will just copy and paste it down. So let's say you want to follow Bank of America. Let's say you want to follow Citigroup, Verizon, Apple, Amazon, Facebook, Netflix, all the good ones, right? Google. All right, and let's delete that. Let's say that's what you want to follow. Ignore this. Actually, let's see if I could just delete this so it doesn't get annoying. Okay. And you'll have it already be formatted, right? And that's not for that. Okay. So what I like to do is you could, format this yourself to be green when the stock's up or to be red. I guess I could go through and do that with you right now. All you really do is you just highlight it, and then you go to home, conditional formatting, highlight cell rules, and when it's greater than, for the change, I did it the wrong way. When it's greater than 0%, you just fill it in with green, and when it's less than 0%, you fill in with red. Again, this will already be formatted, so make sure you check the show notes. But again, I just like to track it. A lot of times what I like to do is I will format trading within 52-week low. So this currently is saying that Bank of America is about 30% above its 52-week low. When I want stuff to start to get on my radar screen, because again, I have 100 different companies on here, what I'll do is I'll format this trading within 52-week low. And what I'll do is I'll go to conditional formatting, highlight cell rules. Let's see, when it's trading between 0% and 15% of its 52-week low, I want it to be green. And what they'll do is it will put it on my watch list. That didn't work because none of these are within 52-week lows. But let's, just for demonstration purposes, let's go between, we'll do 0%, and we'll just do 20%. Which none of those are 20. Okay, 0 and 50. If we're 50% away from the 52-week lows, I probably would use 15 to 20%. Obviously, markets have sold off and then we've rallied. So that's not like that. But this is telling you right now that, hey, Andrew, this company is 10% away from its 52-week low. It's 15% away from its 52-week low. Geoff said in our past podcast that he looked at 500 companies this past weekend. So if you're looking at a bunch of different businesses, sometimes it's just good to do this. I'm a visual person, so I like to add colors where it will say, hey, Andrew, Bank of America is trading within 30% of its 52-week low. I probably would use 0 to 15% or 0 to 20%, but you get the point. Again, this will all be formatted for you, so make sure you check the show notes. And then what's cool is you could sort it just from smallest to largest, and you could really run this pretty much every single day. And what this will tell you is Verizon Communications, based on this criteria, is the cheapest or the closest to its 52-week low. And it just really puts it on a radar screen. And that's really all I like to do it. Again, this is not rocket science, but I just like to keep track this way. Usually I have 100 different cells with just a ton of different companies on here. So it's easy to let things fall through the cracks. And of course, like I said, we want to stay organized. We don't want to let things fall through the cracks. So this is just a good way to do that. Again, you could do this sort of conditional formatting with when you do due diligence, the price and then. Let's say Verizon, let's say your interest price on Verizon it's currently trading at $57.72. Let's say it's $30, and you could just do the same thing on that, right? And then you could run your own conditional formatting. It's trading 48%, but you could format it to where when Verizon is between 0 and 15% of your interest price that you have since you did due diligence on the company, make the cell green, and it'll tell you that. So there's a lot of different ways you could format it. This is just the way I do it. Again, this is so basic, probably to a lot of people, but if you're an individual investor and maybe you're looking for a way just to improve your process, I hope that you could get something out of it. So let's go over other stuff that we use. SEC.gov obviously is incredibly important. This is where companies file all their filings. Let's say you're looking at Apple. This is their 8K. So this is where you get like press releases and stuff like that. So obviously filings are very important, and you don't want to let those fall through the cracks. So one thing I do is I signed up for this free service at Doco, I think that's how you pronounce it, .com. It's for free, and what you could do is you can enter in all your companies, and it will send you an email whenever they file a new filing with the SEC. So that's something that I like to do. I get tons of emails on a bunch of different companies, but if you really want to stay in the know and not have to constantly check the SEC.gov website, this is just a really good source to do it. And again, it's free. So obviously we follow Dave & Buster's. I follow Dave & Buster's, and it looks like they're doing a at the market equity offering for their stock, and they sent out a filing. And if I didn't have this, I would have to constantly check SEC.gov, website to see if there's a new filing. And of course, like I said, this is for people if you don't have a Bloomberg. This is just a good way to, follow everything. You could actually view the filing itself, take you to a website. So I think that's just a pretty good thing to add to the investor toolkit. Next thing that I like to use a lot is we use a screen at Portfolio 123. I won't go through the actual screen itself. Maybe I'll spend a video on it one day. Obviously, we're pretty wary of doing that, but we like to screen at Portfolio 123. There's a bunch of other screens available as well on the internet. Some are free. I know FinViz has one. Guru Focus, you have to pay for it, but just Google around. You could find a good stock screener. But Geoff and I specifically, we use Portfolio 123. The next thing that we use a lot as investors is blogs. We're very big on following other people's blogs, and really big about following blogs of investors that invest very similar to you. So we do special situations. We like to follow special situations, and we've talked a lot about this guy, his blog on the podcast. Clark Street Value, it's a very good blog. OTC Adventures, we follow a lot of OTC stocks. Dave Waters, he's got a really good blog. Corner Berkshire and Fairfax, that's a very good blog. So I would really encourage you to find maybe a group of 5 to 10 blogs that you like to follow and just check in with them every now and then to see what they're talking about. It's just really good to get a group of individuals that invest similar to you to bring you a bunch of different ideas. Geoff uses a blog roller, which really aggregates all of it for him. So he sees whenever, I think he follows maybe 30 or 40 different websites. Whenever there's an update on the website, he gets like a notification on it. So those are also really good to use, but we definitely recommend following blogs. Next, for transcripts, we do use Seeking Alpha. People may laugh at that, but we do use Seeking Alpha. We are paid members. I think we pay maybe $30 a month. But we have found that it's just a really good source to get transcripts. You can pretty much just type in any company. I don't ever really read the research by other people, but if you want to get the consensus or what the market thinks, what other people think about a stock, maybe it's good to do that. But I really only use Seeking Alpha if I want to read transcripts on a company, and I think it's a good source. One website that I think is awesome, and I'm going to include all this in the show notes, so make sure you check that out, is this website called Funding Universe. And it gives you like the history of the companies, and they have a ton of different companies. Even a company like NACCO Industries, which is a small micro cap, $200 to $300 million market cap. They have its history, and I think it's really cool just to learn about the companies. It's talking about the CEO. His sales experience paid off in 1913. He bought the Cleveland and Western Coal Company, so it really goes into the history of the business. I always like to do this when I go over every single company that I'm doing research on, just because I think it starts to paint the picture, and I think it's just cool. So this is a little golden nugget that I like to use. I don't see a lot of people talk about this website. I think I found it through Twitter a while ago, but I'm gonna put that in the show notes, and that's definitely a good tool to have in the kit. Next website that we use a lot is Dataroma. This is just a good way to see who owns the stock and how much they own of it. You could just type in the ticker. For example, Apple is what I typed in earlier to bring this up, and you see that Warren Buffett is the largest shareholder. It currently represents about 30% of his portfolio, and he owns 245 million shares. So I think that's a pretty cool source to see, who owns the companies that you are investing in or maybe doing research on. I don't think it really sways us one way or another, but if you ever just want to get a little bit more clarity on that, Dataroma is a good free source to get that information. Next website that we do use a lot, obviously because we market through it, is Twitter. Twitter is a really good source. FinTwit is what they call it. If you really control who you're following and do your best to limit noise and really do your best just to get the proper information flow. So you could follow certain individuals that maybe invest like you, or you like the research that they do, or they put out a ton of content. So Twitter is definitely good for that. If you ever want to see what maybe the market is saying about a company, you could just type in the hashtag and the ticker, and then you'll see everybody that's tweeting about it. So Twitter could be the greatest blessing or the greatest curse, depending on how you use it. For one, I really love it, obviously, because I get a ton of content on there. I put out a lot of content, and it's always good to talk to other people that are also invested in your stocks. So it's good, and I would definitely encourage you to DM certain individuals and really, have deep conversations about whatever companies that you are investing in. And then the last website that I'll go over, no affiliation to us. Obviously, we use QuickFS all the time on the podcast to demonstrate different companies and walk through it. But I just really think it's such a good website. I know it's not that expensive. You get the business description. There's no fluff, not to say anything bad about maybe other companies, but sometimes there's just so much data on them that it makes the website slow, and they have so many pop-ups. I think the best thing about QuickFS, again, no affiliation to us, is just it's nice and smooth, it's clean, and it's easy. And it paints, a good picture, so we obviously like to use it. You get the income, the balance sheet, the cash flow statement, the key ratios. It's pretty much everything that you pay a ton of money for at other websites, and I know it's cheap through QuickFS. But the good thing is as well is you can get transcripts here if you don't want to use Seeking Alpha. But downloading the financials is a really good source from QuickFS, and I could actually open it, and it's almost like they have a model that's like pre-built for you. Or that you could build off of. So they have the overview, the enterprise value, they go into everything, key statistics, all that fun stuff. But then they have the income statement, the balance sheet, the cash flow statement, the ratios, and really just everything that people could spend so much time, building themselves, or you could download it. Now, I know some people could be thinking, well, one-time charges and adjusting the models and normalizing earnings and stuff like that. And that's true. But I just think this is an awesome source, and, we're definitely huge fans of quickfs.net. So I think that's everything that I wanted to go over today. I'm going to include all of these links in the description box. If you guys like videos like this, let me know down below. I'm really trying just to bring a bunch of different content to YouTube, and I'm really excited about pumping out 2 videos a week, or maybe 3 videos. We'll see how inspired I am. But make sure you hit that subscribe button, thumbs this video up. Do let me know, though, what you guys want to see from me. Use me, to your advantage. I'm happy to teach whatever you guys want, go over whatever you want. Obviously, I have Geoff's ear, so if there's anything specifically you want to get from him, definitely reach out to me, and I'll do my best to convey the information back to you. I want to thank everybody so much for tuning in with me here today. Make sure you hit that subscribe button, thumbs this video up. Super excited to bring more videos, and I will see you in the next video.